Ladies and gentlemen, boys and girls, thank you for tuning in to another episode of the Engine Room podcast brought to you by TokenMetrics.com. We've got the roundtable group discussion as usual, but we've also got another character in the mix. I want to introduce to you Mr. Chris Poulin. He's the CTO of SingularityDAO. And Chris, thanks for joining us on the show. Really happy to have you. So, this is our audience of retail crypto investors, and we're eager to learn more about you and your project.
Sure thing. So SingularityDAO is a child offshoot of SingularityNet. SingularityNet is a organization that was founded and co-founded by my friend Ben Goertzel. And so Ben Goertzel is a proponent of AGI as well as a very accomplished machine learning industrial and academic researcher. And so he's
a legend, man. He's been around
Yeah.
since the early days of this stuff.
Right. So Ben has been doing this stuff for 35, 40 years almost. And Ben and I worked intensely with each other on various machine learning projects since 2009. And most recently, he had worked with Marcello Mari and a guy by the name of Mario. And the two of them have put together something called SingularityDAO with Ben. And SingularityDAO is essentially the DeFi arm or the crypto finance arm of SingularityNet. And so that's sort of how you should look at it, is that SingularityNet is the parent org in AI and in a broader sense, and that the narrow application in the DeFi and fintech sense of the word is what SingularityDAO is.
Gotcha. Chris, how did AI become a thing for you? Because as I peruse your LinkedIn, you've got a degree in political science and sociology, but then you immediately followed that up with MIT, studying digital networks, neural networks. What light came on for you at 1996, 1997 approximately?
Well, I sort of have one of those strange stories that I was actually a coding kid. So I would make my own games and such by junior high. And I thought about marketing them in high school and was generally sort of, a nerdy digital kid on back designing on IBM clones in the 80s. And so, and in fact, a lot of my friends tease me, where could you have been right? As this video game magnet, right? And but anyway, so I'd say by college, I wanted to do something completely different. So I'd already been president of the computer club in high school, and I'd already done all sorts of mathematical things. And so if anything, I sort of wanted to diversify my skill set. So I went into social science. Most people are in social science, and they sort of look at the technical world as sort of a black box. I was actually looking at the social world as a black box. And I don't know if that means that I'm sort of a little off, but the point was that I was a very technical kid and I was already doing Pascal a lot back then. So this was prior to political science. So then I went in and thought that I really wanted to be involved in the political process. And I sure did get involved in the political process. I got a degree. I worked as a legislative coordinator on Capitol Hill. I worked on 4 or 5 different campaigns, from mayoral to gubernatorial to senatorial to presidential, and generally got sick of it. So I burned out of politics very early. In about 1997, I was done and went back to school. And so going back to school, clearly the cutting edge things, it was still kind of AI winter in the 90s, but I went back to study that. I also had started my own business in going back to my roots in web design, multimedia design, and network configurations back then. So this is, again, 90s. So I'm doing school in one parallel and then one entrepreneurial gig in the other. And that led to a lot of things in high-end networking, decentralized services. By 2000, I published a decentralized e-commerce protocol, which Tim O'Reilly was fond of, and
heard of him.
that.
Yeah,
and go ahead. So yeah,
no, I was Tim O'Reilly. That's incredible street cred.
Yeah, but when you're in your 20s, it's not so bad, right? That back then I was sitting in the VIP section with Jeff Bezos, and he was the book guy, and I was the guy that allows you to sell anything you wanted online. And clearly, being focused helps. Clearly, we had different outcomes in terms of the way where things went. But to sort of tie in that boring story into AI is that I was generating a ton of metadata, right? Because I had this decentralized exchange in 2000 that was generating a ton of metadata, and really nobody except for Sergey and Larry at Google were looking at what do you do with all this data and how do you make sort of decisions based on the metadata. Well, I guess the NSA was looking at it as well, but the point is that in terms of entrepreneurial gigs, those are the only people that were really looking at it. So I started getting involved with these conferences called the Uncertainty Conference in MIT in 2001, I believe, and that was kind of where it all took off for me in terms of taking my software development experience, my networking experience, and applying that rigor to machine learning. Because at the time, machine learning was very cool, but it was very academic. And so doing machine learning in a Bayesian context, a neural network context, in a sort of support vector machine context, whatever context you want to talk about, it wasn't really professional grade software. It wasn't really packaged, and it was not focused on solving specific problems. At the time, the coolest thing was cruise missiles and backgammon. So it wasn't really an industrial process. So that's kind of how I got into it about 20 years ago, and since then have done a lot in that space.
Well, yeah, it certainly seems to have worked out for you with becoming the CTO of SingularityDAO just recently, right? We're talking about the end of August you took this new job?
Yeah, around sometime in August. Yeah, I guess I have to think back to the exact date.
I'm very curious about your experience immediately before SingularityDAO, because you ran a company, is that right, called Patterns and Predictions?
Yeah, so I still have a consulting side of the house, which is Patterns and Predictions, and my specialty at Patterns and Predictions has generally been scalable machine learning. So back in 2007 or 8, I was probably the only guy at these conferences selling scalable machine learning. Obviously, the field has blossomed, right? And I approached people like Jeff Hinton and Jan LeCun and people like that about trying to scale what they were doing, and that's right around the time I met Ben. And this is 2009, because I had a kind of reputation with the Defense Department for being able to scale these systems, which again is just based on my background in decentralized networks and encryption.
I got one more question for you, and then I'd love some of my colleagues to chime in and ask some more of their own questions. But Chris, when did you first hear the word Bitcoin? How did crypto become a thing for you?
Well, I think I can tell you exactly when it was $40. So I guess that's 2004, 5, maybe later. I'm not sure the exact date, but I basically own
early in the history. It was trading around late 2009. Maybe Forrest can back text me there, but you're talking about the earliest of the early days there, probably.
Yeah, so that's where I bought Bitcoin. So I have 2 Bitcoin that I've purchased and are stuffed in a wallet that I bought at $40.
Well, cool. And was it just raw speculation for you? Were you intrigued by it as any kind of future of money? Was it the investment side that appealed to you? How did you pony up $80 for 2 Bitcoin more than 10 years ago?
Yeah. I mean, it was certainly not it wasn't a hard purchase, but no, it's funny. Because my friends had actually, so this is, one of those grown stories that I have some buddies that were really into decentralized economy, and they were trading thousands of Bitcoin, on routine mundane items, because they were trying to make the economy get going. And that was when Bitcoin was at like $1 or $2. So I mean, these guys have dumped it since, right? So they're sort of probably all regretting that quite a bit. But yeah, with digital money in general, I mean, I don't know that I fully perceive the magnitude of it as a store of value. I mean, essentially, I enjoyed it. I mean, I think that the key for me, and this does tie the political science and the predictive mathematics, 20 years of predictive mathematics into things, is that generally speaking, and it's true now, that unless the central banks truly dramatically reformed, and there's no reason to think that they would, given that their stakeholders are the sort of, the system, right? Unless the central banks dramatically reformed, you would logically think that some sort of some sort of cryptocurrency would be the better investment, right, from a global standpoint. And then of course there's the dramatic Chinese American standoff about global currency in general, and so I do think that now, in retrospect, I do have a lot of claims that I would make about predictions that have come true, but with Bitcoin, I'm more kind of armchair going backwards and saying, in retrospect, it's definitely a confluence of geopolitical events and central bank overreach.
Right on, right on. Jacob, we have the CTO of a major crypto project on the podcast. I know you've got a couple questions for this guy. What do you got?
Yeah, for sure. So, hey, Chris, thank you for being here. I guess, could you just tell us more about, the specific activities of SingularityDAO, what it provides, the yield farming, the Dyna sets, the dynamic asset sets, and just give us a rundown of that?
Sure. So to tie in so I sort of glazed over about 20 years once I got to 2001 with you guys, but I've been sort of a two-trick pony in the machine learning space. So I generally, I developed APIs and general APIs, and certainly to the extent that scalable and decision support at scale that Ben and I have worked on together and separately for years is important. Clearly you have to have an application, right? And so the two application spaces or enterprise vertical areas that I've specialized in have been finance and healthcare, right? And so those have been the two. And so in finance, my background was mostly in building, again, sort of real-time systems, whether they were high frequency trading systems or they were sort of lower frequency trading systems, but essentially trading systems that required a lot of data and a lot of multimodality data, right? Like, so data that is different, such as crypto pricing data, equities pricing data, consumer sentiment, right? Things like that. So I'd come from a background of what's known as data fusion, right? And fusing those into sort of a large scale industrial pipeline. It turns out that medical is the similar problem, because in medical you have multiple conditions, multiple lab tests, right? And you have to kind of fuse it all together to come up with a diagnosis in real time. So really, the DARPA project that I led was around this sort of commonality, which is to say that you're diagnosing the strength of an equity, the strength of a security, or you're diagnosing the health of an individual. If you look at it that way, it's really the same workflow. So I had come from that background and had built out systems for large banks and hedge funds doing classical securities. And my minimal claim to fame in the crypto community would be that, very minimal, right, is that I understood the algorithms and I understood the encryption side of it, being sort of a computer science geek and keeping my ear to the ground on that. But I hadn't developed any crypto protocols and had no strength there. So I came in semi new or fresh to the crypto community, from a professional context back, 4 or 5 months ago. But I came in with kind of a long-standing understanding of how to build risk assessment and asset class assessment systems in real time, and pulling in multiple data feeds and incorporating that into an asset valuation portfolio. And so that is essentially what we had built for Dynasets, because Ben had a similar background. And I was the only other guy that, sort of in the room on that particular subspecialty. So that's what Dynasets are as a offering. We're sort of staging out the functionality between beta and full public release in February. But essentially it is taking in all sorts of volumes of information, whether it's crypto, sentiment, other data sources, and then of course there's all sorts of different pricing data. There's also metadata about farming yields and various things that people are doing that are providing analysis, and that's another indicator, right? So I think we actually have exactly 9 indicators that we're pulling in right now that we use to do asset valuation. And then the Dyna sets system is to take in those risk factors and to rebalance things in a way that maximizes alpha return and minimizes beta loss.
Very interesting. I think it's fascinating that your whole background kind of led up to this point. So on this fusion of data, is this taken from SingularityNet or is SingularityDAO's your 9 principles for finding undervalued crypto assets? Is that its own thing?
It's a mix. We have so SingularityNet has a mature sort of legacy infrastructure, and so I won't get too down the rabbit hole on software development best practices, but they've got a DevOps CI/CD pipeline that is mature, and so the DApp that you see when you come to SingularityDAO is IP that comes from SNet, but almost everything that relates to finance and asset valuation and financial data feeds is SingularityDAO's unique IP, and so again, think of it as we're trying to leverage as much as possible in a generic sort of machine learning AI context from SNet, but we're trying to maximize at SDAO, the fintech financial aspects of crypto. So there is a blend. So I just saw that at SNet we had released a Cardano bridge, and so we can reuse that at SDAO, but SDAO has again mostly the fintech side.
Got it. So has there been any examples of like high quality early stage crypto projects that SingularityDAO has identified yet, or since the beta hasn't been launched, that's not it hasn't identified any?
Well, I mean, so I guess there's 2 answers there. The short term is that SDAO as a platform has launched other coins, and so there's NewNet, which is a coin. NewNet is a project that was sort of part of the SNet ecosystem and was kind of an incubated thing there. And then the SDAO folks, whether it's Ben or Marcello or Mario, decided that was the prime candidate that they wanted to use their launchpad for. So that's one promising pre-ICO project that was launched. In terms of maybe your question is more specific to post ICO existing smaller projects out there, and I mean I think I'm gonna hold off on answering that, partly because partly not because I'm being obfuscated, but because I don't want to give the wrong impression. And but we will be releasing a report within a week on the initial things that we think are valuable.
Okay, awesome, got it. No worries. My last question. I saw that SingularityDAO just recently announced the integration with 1inch Network to optimize the Dyna sets. Can you speak more on this decision to work with 1inch?
Sure. So we have 2 different ways of executing trades. We have Uniswap connectivity that we built natively in-house. So we have that. So we can do DEX-based things. We also have a few, everybody sort of on the back end connection has Binance and Coinbase connectivity. So we have centralized exchange connectivity as well. But 1inch gives us broader execution capability. So we don't need 1inch to get the trades done, but clearly 1inch broadens the ability to hit all sorts of exchanges simultaneously, and they have additional functionality, and they have a little bit more liquidity protection metrics and things like that. So I definitely recommend 1inch as a partner. I mean, they're really great, and they as a dependency, which as CTO, I try to avoid dependencies at all costs, right? So I try to be cloud agnostic. I try to be as vendor neutral as possible. But I think that 1inch is one of those partners that's, been really, really key for pushing us forward.
For sure. All right. Thank you for answering my questions. I'll throw it to Bill or Forrest.
I've actually got a quick thing, Chris. Information for you, Bill. Here it comes from the legacy world. He's done tours of duty at a number of investment banks before he saw the light and joined the crypto universe. But I actually have a kind of a question for Bill with Chris in the room. Bill, what do you remember about early days at Goldman and so on? What role did AI play back then in investing in the legacy finance space?
Okay, good question. I don't recall anything except the invention of like dark pools. So I'm assuming that AI or machine learning was involved in how to match up buyers and sellers in this world of dark pools, where essentially Goldman became an exchange unto itself where big players could match up buyers and sellers. But, back in the days of Goldman, I was more in the, market directional zone versus the AI zone. So the answer to your question is, dark pool and anonymous execution.
Cool. Sorry for the aside there. Yeah, if Bill or Forrest, if you guys have questions for Chris, hit him up.
Well, one quick interjection was I was working with Goldman a lot in 2008, and I certainly agree with everything Bill said, but I think that to sort of understand how the quant desk team worked that I was working with, they wanted to go with sort of tried and true metrics, and so what we would call AI at Goldman, my understanding at least, for from a little bit more adjacent than Bill, was that it was Sharpe ratios and martingale and all of these sort of tried and true econometric metrics that were then aggregated into kind of a decision tree, right? And that was kind of the state of AI back then, because I know that when I was pitching them on kind of hierarchical Bayesian analysis, they were kind of scratching their heads, because a lot of the Goldman quant guys were physicists, and they liked things that were very discrete, right? And sort of aggregates of discrete risk values, if that's not too technical of a deep dive on Goldman in 2008.
Forrest, Bill, what do we have for Chris before we put a button on this thing?
Yeah, I guess my question would be, so if I understand this correctly, do Dyna sets, are different Dyna sets custom tailored to meet specific investment goals? So say, one investor may be interested in a specific low volatility, low risk Dyna set versus, a high volatility, high risk with higher expected returns a Dyna set. And if so, what are those metrics that differentiate each Dyna set?
So in the beta version, Dyna sets will be more based on pairs. So it will be that you isolate a variety of tokens that you want to trade against. And so there are multiple Dyna sets, but they're not based on risk profiles. They're based on their token profiles or the token tickers, right? And so in the beta version, we are allowing people to choose the baskets plural that they want to be in the full sort of full release version in February. You are correct that we will have more of an idea of the risk and the liquidity, and that's part of what the beta is for us, is to sort of, we've done a lot of back testing, but forward testing, how do we actually how do we guarantee that this is a lower volatility versus higher risk portfolio.
Gotcha. And then I guess my follow-up question would be, so let's say a user selects all their different tokens that they want exposure to. What metric is is, and I think you may have answered this in your intro, but what metric is the AI optimizing for? Is it for maximum returns? Is it based on drawdown? Is it trying to minimize risk? What metric is being optimized for? If we go in and select a certain profile of different pairs.
Right. So the way that the system in beta is working, and we don't mind talking about it, is that we have two major metrics. So we have sort of a pool of managed assets, which is maximizing, minimizing beta so that it reduces the risk, and that's sort of where the money parks, and that's trying to eke out a little bit of alpha, but maximizing the safety of the cash. And then meanwhile, we have human traders who have done a lot of market analysis and now have strategies that they feel that they can take that cash and make put it to work, as they say, and generate some alpha kind of on these one-off trades. And that's the way the beta is working. In the full release, we will automate that even further, and we will make sure that we can trust that sort of automated pool of cash as much as we think we can, as well as automate some of those cyclical trades that the traders come across. So we will be able to try to get things a little bit more polished and a little bit more automated. But I would stress that in the background that it's not just automating everything and then trusting it, as we've seen. Was it Knights Capital or whatever some of the meltdowns have been due to algo trading? That it's integrating it, but integrating it in a way that we understand the risks as best we can.
Chris, what can we expect from SingularityDAO in 2022? The launch of the beta is pretty exciting, but surely your plans they don't stop after next week. Can you tease anything for next year?
Yeah. So again, the beta is kind of what I just described. I fully expect that by February 15th, we will have a much more automated offering with some increased confidence on returns and things that Forrest brought up, right? In terms of characterization of risk, characterization of Dyna sets. And so we will have that in the February timeframe. After that, we will be working quite a bit on improving performance. So in the deep learning community, in deep learning finance community, which is super small, if you get it right, you can outperform human performance in many tasks and have really high alpha. And so I'm working in some research groups already now doing that, but it's all sort of simulated. And so we will try to come up with portfolios in 2022 that dramatically outperform. And if we can dramatically outperform, that's obviously a win for everybody.
Right on. Do we have any parting thoughts for Chris before we wrap this thing up, guys?
Yeah, I have one more question. When I was combing through the white paper, I saw near the end that it says SingularityDAO will make use of NFTs as rewards and incentives for community participation. Is this still the case?
Yeah, I mean, it's sort of we have some NFT projects coming out. I think at the end of within a couple of weeks that are sort of early days projects. I'm not directly involved with them. I mean, I sort of oversee them as CTO, but they're kind of lower on my priority list only because of the fact that I'm so Dyna sets focused, and we'll kind of come back to that in the new year quite a bit. And without a doubt, I'm excited about NFTs in terms of as a kind of a mechanism, right, for identity space and for transferring assets. And so yes, it's definitely in the roadmap, and we haven't built in fancy components of NFTs into the system yet, but it's definitely roadmap.
Awesome.
Well, right on. Guys, this has been an episode of Engine Room podcast brought to you by TokenMetrics.com. If you like Chris, if you like this conversation about SingularityDAO, I want to go ahead and plug an interview with the SingularityDAO CEO, Mr. Marcello Mauri, Chris's colleague. You can watch that on the Token Metrics YouTube channel coming out this Sunday. Chris, thank you for spending a little bit of time with us today. It was a real pleasure learning about you and SingularityDAO.
Yeah, great to meet you guys, and thanks for letting me rant about tech.
Of course. Till next time.